Happy Wednesday. Brian Manning here with your realtor update, just dropping knowledge bombs. Oh boy. So this week we're going to talk about LLPAs. And this doesn't mean a lot to most realtors. I understand that. And it's a little bit nitty gritty on the mortgage side. So an LLPA is what's called a loan level price adjustment. And when you lock in an interest rate, there's hits to the interest rate. So you could have a hit for less money down, more money down. You could have a hit to the interest rate for credit scores. You could have a hit for an interest rate if the property is a condo versus a single family residence. And a hit means it would impact the pricing and then it would cause the interest rates to either move higher or lower based on the hit. Well, the FHFA came out and they announced a whole new grid for LLPAs. And I think this is very impactful because this is really going to impact any buyer that's purchasing a property with a conventional mortgage specifically. It's also going to impact FHA, but we do a lot of conventional financing here in the Boulder County and into Denver area. So that's what we're going to really mostly focus on right now. This comes into place in May. So this is any loan that would be sold to Fannie Mae, Freddie Mac, FHA, et cetera, starting May 1st. So what that means is you got to look at these loan level price adjustments for closings that are going to take place probably up until like April 15th, because you have a closing up until April 15th. That's enough time to package and securitize the loan with Fannie or Freddie. So you have to have a buffer in there. So, for about the next couple of weeks, we're going to be working off the prior loan level price adjustment grid, but coming in to a couple of weeks from now, it's all going to be off the new LLPAs. So the FHFA says we want to make homeownership more affordable for people that have lower credit scores and for people that have less money down. And the way that we make homeownership more affordable for people that have lower credit scores and less money down basically is to have people that have higher credit scores and more money down pay for the people that have lower credit scores and lower money down. So I put a chart together here that I just want to show you, and this is not going to mean a lot to everyone. I understand that it's okay, but I just want to show you in here where if you're buying a home where you're going to see a lower loan level price adjustment. So you're actually going to reap a benefit out of these changes. And when you're buying a home and obtaining a mortgage where you're going to see higher loan level price adjustments, so you're going to actually incur a higher rate than you're experiencing right now. So as you can see on this grid, anyone that's we'll call it a first-time home buyer or a new home buyer buying a home with 5% to 3% down, anywhere in here, regardless on the credit scores, is going to see a benefit in the interest rate. And then historically on a conventional loan, if your credit score was below a 680, you kind of got penalized. And we started to look at other types of financing such as FHA. Well, now it's going to be changed where if your credit score is below 680, there's improvements here that we didn't have before. So now it's going to open up the playing field that, if you do have a credit score of 620 or higher, where you're going to start to actually really get a benefit out of a conventional loan where, for quite a while, recently and in the past, if you were below a 680 credit score, we immediately looked at FHA because the loan level price adjustments were not working in our favor. The reason why I bring this up is because we are going to see an impact for people that buy a home, put 20% down, 25% down. You have a 760 credit score. Historically, the loan level price adjustments wouldn't negatively impact them. Now, completely counterintuitive, but that home buyer is going to get impacted and their interest rate is going to get impacted by this. This is the same for every single lender across the country. It doesn't matter if you're a bank, a lender, a broker. If you originate a conventional loan that gets securitized through Fannie Mae, Freddie Mac, et cetera, this is going to impact the borrower and their interest rate. So I just want to throw this out there because as we're talking to borrowers, we're going to start getting into this kind of gray area or no man's land where we have to really pay attention to, here's your interest rate right now. You're getting pre-approved. You haven't found a home yet. So we need to plan for maybe your closing taking place with these new loan level price adjustments, or we might have a pre-approval that we do, and they're going to go under contract right away, close in 21 days or 10 days or whatever it is. And they might see a little bit of a benefit in the interest rate because they can get current market loan level price adjustments. So I think it's really important for us to just be knowledgeable of this and pay attention to this because it is going to impact our conventional buyers going forward, positively for first-time home buyers, positively for lower credit scores. I don't like the word negative. It's a poor choice of words, but I'll say it. I'll say it negatively for higher credit score, larger down payments. Again, FHFA is wanting to make homeownership more widely available for everyone. And they want people to be able to buy a home and not be severely impacted if you're putting down 3 to 5%, or if you don't have a perfect credit score. If you have any questions on this, give me a call. I'd love to help you. Happy Wednesday. Have a great day.